Good morning. You're watching Business World Live. I'm Danie Laurel. It's the start of a new trading day. Let's kick off with our banner story. Remittances fell for a second straight month in January. That's as many Filipinos had returned home after losing jobs abroad due to the health crisis. Money sent home by overseas Filipino workers slipped by almost 2% to $2.6 billion. That's from $2.65 billion a year ago, according to BSP data. Remittances from Filipino seafarers increased by 1% to $558 million, but the cash remittances sent by the land-based OFWs, that dropped by 2.4% to $2.04 billion. Now, for the full year 2020, the remittance inflows dipped by 0.4% to a little below $30 billion. That's marking its first annual contraction since 2001. Union Bank Chief Economist Carlos Asuncion told Business World that the lower remittance inflows was due to base effects and the continued repatriation of OFWs. The DFA has earlier told a congressional hearing that nearly 400,000 Filipinos have been repatriated since the pandemic began in 2020. The Bangko Sentral expects remittances to grow by 4% this year as it pins its hopes on an economic recovery. Okay, guys, quick health check on how the peso is performing after that remittance sprint. Despite the fact that it was actually lower, it was still better than what analysts had expected, which was a stronger contraction. You can see on my terminal here, the peso trading at 48.51. That's actually strengthened quite a touch by 1 2/10%. Now, moving on to the market open here in the Philippines, at least this Tuesday. That is, of course, after we saw the index suffer yesterday, the worst slump that we've seen in Asia. Recall that we fell as much as 3.6%. I'm going to be pulling out the 3-day chart so you guys can see that dive. Before we finally pare back those losses to close or drop at least by 2.6%, this is the lowest level we've seen since November 4, and it appears that the pain is not yet over. We are now opening a down 0.4%, 6,500 levels, still closing in on that 6,500 flat level. Now, this according to Lex Azurin of AB Capital. Investors are, quote, essentially liquidating their holdings, and what he has said is that in contrast, the recent outbreak in Hong Kong, which has led to hundreds being quarantined, has not actually triggered a similar sell-off. So he's questioning why actually the Philippines is seeing a bigger sell-off. Now, this, of course, happens as we're seeing more localized lockdowns. Several barangays, particularly in Metro Manila, have been placed under these lockdowns. This after 5,404 cases were reported on Monday, the largest single-day increase since August of 2020. NEDA has backed these lockdowns, but economists are warning this could dampen recovery prospects further. Now, you've got NEDA Acting Secretary Carl Kendrick Chua not yet commenting on the impact of this renewed surge of the COVID-19 on the economy. He just said that the government is working urgently together to prevent this. Malacanang, however, has said that President Duterte would not place Metro Manila under a stricter level of lockdown, at least not for the month of March. And nevertheless, trading is still moving on. You can see on my terminal here, only services, the bright spot this morning, up by 1 2/10%. The rest being sold off continuously. And yet, President Ramon Monzon of the Philippine Stock Exchange is still targeting the new indices and short selling quite soon. This comes on an interview in Bloomberg Television yesterday. He's still planning to start the 2 new indices this year. So the mid-cap index will be happening in the third quarter and the high dividend yield index in the fourth quarter. Another one very interesting will be the sustainability or ESG index. It's planned for 2022. He's also hoping to get regulatory approvals for short selling by the second quarter. Another one that's quite optimistic here, I'm going to pull out the specific stock for you, PAL Holdings. They have actually resumed flights to key areas according to their president. So a lot of the commercial flights to US, Canada, Japan, Saudi Arabia, UAE, and Qatar, as well as other Asian countries, have now resumed. They've also resumed most of their domestic routes, and they've been focusing on repatriation and cargo transport. PAL bucking that sell-off, up by 0.5% to 6 pesos and 20 centavos this morning. Now, guys, here to chat with us on the latest moves in the market, we have with us Luis Limlingan of Regina Capital. Good morning, Luis, and welcome back.
Hi, good morning, Danie. It's good to be back.
Okay, Luis, let's take a step back here. We're approaching 6,500 levels. Why is this sell-off being really, really strong when all over the world naman, there have been surges, there have been, second, third waves already. And, as one analyst pointed out, it hasn't been as bad in terms of their equity markets, particularly in Hong Kong. What is it that's making us stand out and making us the worst in Asia at the moment?
Well, there are a number of things why I think this sell-off I think is warranted, even though at some point there's a bit of overreaction. For one thing, a lot of the economy of the Philippines is concentrated in Metro Manila. So if there's a chokehold in the city, it really weakens the rest of the country. Whereas in other countries, I think they're not really just dependent on the capital, and then there are other major cities that are still flourishing. Second, I think, is the vaccination rate. I think I was reading that we have a little over 100,000 that have been vaccinated so far. We're still waiting for the other vaccines from the other companies to arrive. Whereas if you compare to the States, yes, they've been seeing cases of nearly 100,000, 200,000. In fact, at its peak, now it's down to maybe 30 or 40,000. Still much more higher than what the Philippines is seeing. But they're already vaccinating more than 100 million. That's already one third. So there's significant progress that's already being made. So a lot of these things are taking into account. Another thing, which was the last that's a bit of concern, is inflation. So we already have negative growth, and now inflation is peaking at 5%. Whereas in other countries, I think in the US, we plateaued at less than 2%. So at least it's being managed. Whereas on our end, we have negative growth, whereas the price of goods, I think, which is caused by the supply side, is pushing up prices. It's really making investors rethink their assumptions for the Philippines in terms of the growth prospects moving forward.
Okay, very interesting point there. So sorry, I think I'm hearing a bit of technical echoes here. But anyway, Luis, I just wanted to point out the best and worst performers, at least for the past 3 weeks here during this surge. Is there some sort of are investors picking up? Is it the lockdown stocks? Doesn't naman seem to be the case. And what are they really dumping right now?
It's a mixed bag right now. I think at this point they're making bets as to which are still going to be performing. Obviously, the fourth quarter came out, and now they're making their assumptions as to who's going to perform best in the first quarter. Those probably that were dubbed as COVID stocks. We're going to benefit from online, working from home. Maybe they think that probably they need to unwind moving forward for the second half, but that remains to be seen. So at this point, I think one, they're going for the best that probably will be benefiting from the recovery. Second, I think is the cash dividend paying stocks, since rates have come down abruptly, and I think they're looking for alternatives for to park their funds in the meantime.
Do you see that this trend that it still hasn't been coming back to the cyclical stocks? We're still on those growth stocks, the COVID stocks, is against what's happening in the rest of the world, where you're actually seeing a broader based recovery in terms of the stocks. For instance, the S&P 500 record yesterday. So what is going on here, and does that mean that our recovery is going to be taking a little bit longer than the rest of the world?
I think for one, they were anticipating that the recovery to the Philippines might take much longer than the rest of the world. Obviously, since we're not one of those, where the vaccine has been developing, being tested, and where significant, donations were made. We're just one of the recipients right now as to when there's going to be excess supply. Second is, I think, the rate of recovery. Even though they were anticipating, yes, it's going to be later, now they're changing their figures because I think because of what's happening in inflation, especially with oil now that it's hitting around the $70 threshold. They didn't see this same time last year when the economy globally came crashing down. Since we are net importers of oil, and I'd say 50 to 60% of our goods are tied to oil, whether it's transportation or operational costs, that really is going to change again the assumptions and their forecasts again for at least 2021.
Luis, let's move on to specific stocks in focus this morning. You've got reports that have actually been confirmed that MPIC is in talks with the owners of Discovery World for a potential investment, but they did mention no definitive agreement yet here, any complete control. Good deal ba yan to bet on not just real estate for this conglomerate, but particularly leisure, hotel, travel related stocks at this point in time? Is there potential here, especially for these two specific companies?
We can see there really is a lot of potential, even though tourism hasn't resumed completely. I think it's still going to be off at least for this year, even if we see a partial recovery. But you can see there's a lot of pent up demand. People, just talk about with people closest to you. They've been longing to travel. So I think they're waiting for that. And obviously, companies such as Ayala, where they have a proven method to make it safe with their El Nido resorts, that people can take a nice trip so long as it's safe. They have the swab test. They make sure that they observe the correct safety protocols. Perhaps this is what they want to do for with the Discovery World. Of course, we don't know exactly what they're planning, but this might be something that's piqued their interest, and that's why they're looking into it.
Okay, and is that in any case interesting for retail investors to then start investing in stocks like Discovery World?
I think probably it's more of a timing issue when you think there's going to be recovery, because if, let's say, the vaccination before it becomes more widespread will take maybe 3 or 4 months, probably park your funds somewhere else. I'd say yes, maybe in the long term, these travel related stocks are a good bet, especially when there's recovery. As I mentioned, there is going to be pent up demand when people can finally resume and make up for the lost time. But in the meantime, I think it's a seller's market. Don't rush. Look for a price that's probably attractive for you. The bets, perhaps at this point, I would say, are make them very short term. If you probably get into the stock now, and if you can trade it at a profit, I think do so, because at this point it's a moving target. Nobody anticipated the surges in cases. We don't know the exact timeline for the vaccine, or as to when inflation, for example, is going to be contained. So a lot of these things are happening all at the same time.
Okay, let's move on to another group of stocks here, still related to Metro Pacific, but now when it comes to regulation, a lot we're focusing on pre-COVID. Seems so far away from now, but a lot we're focusing on the regulatory environment here in the Philippines, particularly on those water-related stocks. And now it seems that the government is finalizing deals, or new deals at least, with Manila Water, and then after that, Daw Maynilad. Does it mean that these regulatory woes have been solved? Did that happen during COVID in any way, shape, or form? And are those risks now off the table? Is this now ripe for the picking?
Well, I think the risks stem from what happened previously when there was a drought. And we're talking about the water concessionaires, right? So I think that's why the prices spiked, for one. And second is because there wasn't enough supply to manage the fall in the water levels at this point. So I think they're trying to avoid it. Anecdotally, we were just we were asking people in the industry, and I think the talks are still ongoing. I think they're already making some progress. I think they were saying that I think they were looking at the new Clark City model as a means to adopt it. But I think in terms of indexing the operating costs, I think they're still trying to reach an agreement. So it's still up for discussion. But I guess probably right now they're taking their time, because the immediate need right now. Probably it's secondary, but of course, I think they're still making progress so that when, let's say, the summer months happen, and then there won't be any problems moving forward when there's, when it's done.
Luis, last question before we let you go. What's your general outlook on the utility stocks? So, apart from water here, you've got also Meralco, energy stocks, especially now that the lockdowns might be prolonged, and we might just be staying home. What will there be a different business case in 2021 compared to 2020 for these particular stocks?
Right now, I think the utility stocks have the same ongoing thesis with last year. High dividend paying, they're quite stable. If you're going into the telcos specifically, there's probably going to be a bit of a upsurge, especially in demand, because the needs and requirements of both the individual and businesses alike are changing. We're finding that we can do everything virtually when we used to be having the interview face to face now. So probably it might be the new normal moving forward, especially when when I guess life becomes or resumes back to the way it was. Perhaps instead of meeting face to face, everything's going to be doing virtually, not just with meetings, maybe with your retailing, with your banking, for example. So that probably that definitely has been the trend, but because of COVID, everything has been accelerated.
Okay, well, hoping to actually see you in person in the next year. Luis, thank you so much for those insights, Luis Limlingan of Regina
Thank
Capital.
you, Dad.
Here are the other headlines for keeping our eyes on. The House Ways and Means Committee approved a measure imposing a 20 peso tax per kilogram of plastic carrier bags. This bill proposes levying and collecting 20 pesos in excise tax per kilogram of plastic carrier bags removed from the place of production or customs house. The government is expected to generate up to 4 billion pesos in taxes annually if this measure is enacted. An earlier version of this bill proposed a lower excise tax of 10 pesos on plastic carriers. Meanwhile, the substitute bill directs 100% of the revenues that will be collected from plastic bags to solid waste management programs of LGUs. Now, the Philippines is looking to secure grants from the United Kingdom's Cross-Government Prosperity Fund worth £34 million. Finance Secretary Sonny Dominguez and UK Ambassador to the Philippines Daniel Cruz signed a Memorandum of Understanding on Monday. That's for the Philippines' participation in the Fund for the ASEAN Economic Reform Program and the Low Carbon Energy Program. The UK government allotted £19 million for the development of the beneficiaries' capital market, while another £15 million is earmarked for green finance and energy efficiency projects. Indonesia, Malaysia, Myanmar, Thailand, and Vietnam are also included in the list of beneficiaries of the UK fund, which is valid until March 31st, 2022. And this from the Philippine Star. The Asian Development Bank is planning to lend $3.5 billion, or about 168.65 billion pesos, to the Philippines to help the economy recover from the pandemic-induced recession. In a Laging Handa briefing, ADB Country Director Kelly Berg reiterated the bank's commitment to financially supporting the Philippines. $1.75 billion will be utilized for the South Commuter Railway project or the Clark-Calamba Railway. Some $400 million has been also set aside for local governance reform programs, for education, and universal healthcare. While the rest of the funds will be allocated for other infrastructure projects in Davao and Manila, as well as to fund sustainable tourism development projects. And this just in, San Miguel President Ramon Ang said the Skyway Stage 3 will not close down and will remain open after work hours on Tuesday. In a text message to the Philippine Star, Ang said there will be no closure of the almost 19-kilometer toll road. The conglomerate and the Toll Regulatory Board, which was said to have issued the closure order, are now in talks to fix what appeared to be a miscommunication between the two. It's still unclear at the moment what caused the mix-up that started overnight when the Skyway management mistakenly announced on social media that Stage 3 will not be accepting motorists indefinitely starting March 16th. And that's the first look into the business day. Today's Tuesday, March 16, 2021. Catch Business World Live for the market closes at 3:15 p.m. today. I'm Danie Laurel. Mask on, wash hands, stay safe, Philippines. We are One News.